Eric Muathe, Muathe.com, with the US market analysis for the weekend of September 15th and September 16th, 2016. Let's take a look at markets here with about 2 hours to go before the close. Let's call it a slightly up day. As you can see here, markets are slightly higher. Let's take a look at those charts. If we take a look at the NASDAQ weekly, right now we are seeing the market coming back to test this breakout based on the 2015 weekly closing high. That level to watch there is 5214.00. Anything below that price range would be bearish. So right now we are trading very close to it. I think because if we stay below that price range, that will be confirming a failed breakout. Keep in mind the most recent move to new highs as far as the NASDAQ is concerned. So the market did make a new weekly closing high. But take a look at the RSI. The RSI failed to make a higher high. So that's negative divergence, which might be one of the reasons from a technical standpoint why the market is already down this week. And if you take a look at the NASDAQ from a 3-year weekly chart and take the previous break level, so this break right here brought the market off the highs of 2015. So what we can do with that information is just use the same line, extend it. And you can see what's happening here is we had tried to move above this line here and here, which is for the highs of late 2015. Of course, the market failed and ultimately we went on this huge drop. And now we are coming back here, and as you can see, the market has failed to move above the same line. So which again is another negative for the market as far as I'm concerned. Of course, the biggest negative for the NASDAQ is the monthly chart. Now you can't escape this. Right now, the issue here with the market is the fact that we made a higher monthly closing high, all-time monthly closing high. Take a look at what the RSI did. The RSI failed to make a higher high. In fact, the RSI failed to move above 61.8 as the market was making all-time highs. This happens to be the worst type of negative divergence, according to my research. And also, there's another way of looking at this. If you go to a long-term monthly chart for the NASDAQ, there's a couple ways of attacking this. Let's take a look at the previous breakout. So we go and draw a line connecting the highs of 96, 2000, the highs of 2007, the highs of 2011, and just keep it like that. And I'll just leave it right there. So what we see here is once the market finally broke out above this blue line, which is this move here in 2013, the market went on a fantastic bull market run. And this is this period here. It's very simple to see that. Now, ever since the market broke below that, so we see that the market did break here, coming off the highs there. We tried to move above that line in December for the highs there. And you can see September, October of this year, the market is showing resistance. So my thinking here is that as long as that blue line has become resistance, what the market is saying is that the next meaningful direction for this market is ultimately in the coming weeks and months for much lower prices. And keep in mind, another thing we've been talking about is if you draw a line on the RSI right there, it's a simple line. That line so happens to be at about 61.8. Again, this is my own personal research. And you can see that the biggest drops, of course, what 2000 bear market, 2008, early 2009 bear market, all of them began with the RSI breaking down below 61.8 with the resistance there. And also there was a trend line break in late 2007 that also corresponded with this line break here. And that was this break. And of course, it brought the market off the highs of late 2007. So the problem with your current market is that we are already seeing the NASDAQ showing that it is responding to that same line. And as long as the NASDAQ is down for the month, one can still expect that, generally speaking, we are now looking at a market that has changed its sentiment, and I think the sentiment is ultimately that the market is pointing down. Now, this doesn't have to be hour to hour, day to day, but ultimately watch the downside. On the Dow weekly, in the short term, we can watch this recent weekly closing low, and that level is at 18,085.45, which is this weekly closing low. If the Dow cannot hold above that level, that's not going to be a good indication of short-term direction. So short-term, we can watch this. Right now it's showing support, which is constructive. If the market goes on to break that level, that would be confirmation of a market that wants to go down. Also on the weekly, the level we've been watching continues to be in play. Even as we come to the end of the week, the market is still testing this line of support. Market bulls would like this line to hold. So if you're bullish on the market, you'd like this market to hold and point to the upside, showing that this is all the downside we get for now. Otherwise, a break of that trend line would not be good, and more importantly, a break of the trend line on the RSI and a move below 50 might not be good. Right now we can see here that the market continues to be constructive, because on both fronts we are above the previous recent weekly closing low, and also right now we are seeing this line hold, which is constructive. On the Dow 30-minute chart, we can see the reason for the bounce off the lows of the week here is because the market was coming back to test this entry on the RSI, which brought the market off the lows of September, and the market went on a recovery run. So since the lows here, market went higher, so we drew a line from here, and you can see at the lows of the week the market touched that level with uniform action and bounced. And why is the market pulling back off the highs of Friday's session? My own estimation is based on the line. So there was a break. Now that break here brought the market off the highs there. So short term, all you have to do is extend this blue line, and as of Friday's highs, the market hit that level and already is responding to it. Take a look at the hourly, which shows this even from a better perspective. At the highs of the day on Friday, what the market did essentially was come back and test the top side of the hourly RSI, as you can see there. And again, I get the biggest takeaway in all these markets is the monthly charts. Just like we saw with the NASDAQ, the Dow also has the same look and feel, where it has come back over many years, made a new monthly closing high, all-time monthly closing high, but the RSI did not make a higher high, and RSI failed to move above 61.8. That's a huge negative. Let's take a look at the S&P 500. SPX. We go to the daily, and the daily is giving bulls a reason to be expecting a market bounce based on this recent daily closing high. The market continues to bounce on this line. So this level to watch here is 2119.12. Again, this recent daily closing high. Ever since the market jumped above that, the market has come back to test that level and held and did hold, and as of the lows of the week, this also held. So as long as this is holding, it can give you a reason to stay long, because the market has yet to break this obvious line of support. But don't expect the market to be moving anywhere fast until it can clear the obvious resistance, as shown by the 30-minute chart of the Dow and also of the S&P 500. At the highs of Friday's session, this is where the market stalled. So I would not expect the market to be moving higher until it can clear this short-term resistance on the hourly chart. And to conclude the video, we really have to spend some time again on this monthly chart for the S&P 500, which is absolutely at the moment very bearish. So the SPX failed here with a trend line break, in 2000. Off the highs here, we went into a major bear market. We did the same thing in 2007, 2008, or late 2007. This break here again led to another multi-year, multi-month bear market. And you can see we've already broken the trend line. And now this trend line is becoming a problem. Resistance here, S&P 500 at an all-time monthly closing high, but did not move above 61.8. That's not good. So ultimately this is the issue, that we might be looking at markets that have already confirmed that in the coming months they are going to be way lower than where they're trading today. That's my view until the monthly charts change. Eric Mwatha with Mwatha.com. For those of you looking for stock ideas, and for subscribers, be on the lookout for part 2 of this weekend's market analysis, which generally is out sometime on Sunday morning. Again, enjoy the rest of your weekend. Be good. Peace and blessings. Riches, blessings. Mwah. Woo! Yeah!